Zen Money Team.
Hey, what's good, humans and aliens? It's gLife here with Zen Money Team, and today I'm going to explain to you a little bit about the CME gap and the CME gap trade. So, the CME gap, if you're a Bitcoin trader, you've heard of the CME gap, and the trade is basically just the assumption that price is going to return to fill that gap. If you're from the stock world and stuff, you know about gaps. You'll have gaps overnight, you'll have gaps over the weekend. And those can get filled. Those are probable to get filled. They're levels that you want to keep in mind. So here's an example. Let's go over to my charts. And this is just a 4-hour chart on the CME. So the CME is the Chicago Mercantile Exchange, and it is an actual chart of its own. See that? It says Bitcoin CME futures. You have to look that up. The CME, I'm going to show you a couple of things. So over here, the CME, where it closed, this is an indicator called the Bitcoin CME Gap Finder. Now, where it closed on Friday was right here where this blue line is, 110.874. Since then, it's gone up. That's creating the green shadow. But that's just on our 24-hour chart that most of us are watching. So you have to know about the CME chart. It is its own chart. So right here you can see, for example, here's a gap where it closed on a Friday and reopened on a Saturday. Or no, it closed on a Friday, reopened on a Sunday night, and there's a big gap here. That did get filled. See all this price action here, it got filled. So I'm going to explain that to you real briefly. So here's the Chicago Mercantile Exchange. Here's where it closed last Friday. Here's where it opened last Sunday. This right here between the wicks is a gap. It's a small gap, but it's a gap nonetheless. And as you can see, if you had set a trade there, anywhere in there, you would have made great trade. So there was a gap, which means it's a runaway price, and we're assuming price is going to return to it. So if we had started all the way back here, just waiting and assuming that price will return to it, it does. It hits into it here. And where would the stop loss be? Even at the bottom of that candle? Or, I mean, you could do all the way at support, but the bottom of that candle was good enough for this trade. And as you can see, it ran, 4.5. Even if you hadn't captured all of it and you just decided you would capture it from here, still got 3.5 risk to reward ratio. So that is the CME gap. And so now let's look at it live on a regular chart. So this indicator shows us where the gap will be when it closes. Let's look at a couple previous weeks to tell you what I'm talking about. So here was where it opened. No, here's where it closed on a Friday. And where it stops is where it opened on a Sunday. That's a big gap. That's 108,600 down to 106,900. Almost a $2,000 gap right there. It's 2% almost. So we assumed the price would return to it. Now on the regular chart, it almost did. It almost filled that gap. So this is on a Monday, October 25th. Let's look at the CME gap chart and see how close it came to it. Monday, October 25th. So it just didn't come. Oh, wait, this was probably it too. Monday, October 25th. Yeah. So your gap is down here. It came here. It did not quite fill the gap. So that's why you got to compare the two charts. That's the only reason you got to know about the CME chart. Is right here you could just predict that it's going to fill this level, but the levels are slightly different on the two charts. Now again, if we had done this trade, this is the 1-hour chart. That's the only reason it looks different. But here's the gap. We would have just created a trade here, cover our recent stop loss and order block here, and stretch it over. It would have gone in here. At that point, I would have just been targeting some other order blocks. I would have been targeting like right up here. It's probably where I would have been targeting. And that's a massive trade though. That's a 4.51 risk to reward ratio trade. So that's the CME gap trade. So if price action goes all the way up here, then we're assuming it's going to return down to this level. We would look at this as like a stop loss as it returns down. or you could wait for your confirmations, whatever your confirmations may be. It's just a level to think about. It doesn't always work. It's not 100%, but it is a level to think about when you're trading. It could come back. It could revisit that level. There was another good example, and I think it was this one. See this gap right here? This gap, it ran away, leaving a gap. And people that know about CME gaps, you're thinking, well, there's like a really high percentage chance we revisit that level. So if you had set the long, you would have lost it. But the point is, it revisited the level. A lot of people with the CME gap trade is just back down to that level. So what you would have done is right around here, you would have started building a short. Whether your short would have made it all the way up here, that depends on how you trade. But the fact is, you believed it would return to this level. And even after a big run, it returned right to that level. So that's the CME gap. That's the CME gap trade. Make sure to follow me on X. Make sure to follow me on YouTube. And I'm out of here. I'm going swimming. Peace.
Zen Money Team.